What's up, guys? Bill here. Welcome back to another Watchlist walkthrough. If you're new to the channel, this is a segment I do once a week, reviewing my trades that day. Sometimes those trades are posted, the ideas are posted for free on Twitter, publicly, but they're always posted in my Discord, which you can access through Patreon with a link in the description below. First, let's talk about SPY. SPY, I started to swing on yesterday, Tuesday, and I'm going to break down why I started this swing. And the main thing I want to touch on is the idea that for me, when I'm starting a swing, I'm trying to piece together a bunch of reasons that I want to take the trade. And I kind of think about it like being a detective. A detective can't just, upon first having a hunch that someone might have committed a crime, go break down their door, arrest them, and all that. Why? Because they haven't built a case yet. And until they do, there's a chance that this criminal who might be guilty gets away for free, gets off without a conviction because the case isn't substantial enough to prove that they're guilty. I think about it the same way when I'm taking a swing trade. I want multiple reasons to suspect that this is going to work out in my favor. All right. So anything can spark me getting interested in the trade, but then you got to start doing the work. You got to check everything that you believe in and trust in, with your analysis and the data and everything else, and try to see, is this a concrete case or not? All right. Does this seem like a slam dunk? So I'm going to break down that process for SPY in the swing I'm currently in right now. Okay. On Tuesday, we gapped down quite large and continued selling. All right. We opened here at a big dark pool level, this 1840. All right. Now, this was a level that was placed on this drop down this day at low a day, which is very notable because a lot of these dark pool orders, they happen end of day, right at the bell. They're pre-arranged, okay? And for them to happen at low a day intraday is very abnormal. And then you can see the next day we rip, okay, and make new all-time highs. So this is an important level that had never been retested, and they gapped right down to it, okay? And then we kept flushing. We lost that level. So the next place that I would even be looking for support on SPY was down at the 20 EMA, which we can see here has been awesome support for SPY multiple times, okay, so far during this run-up. And we also had confluence with another big dark pool level that had yet to be tested that was created on the close of the 19th. Either that or the open of the 20th. To be honest, guys, I don't remember off the top of my head, but I think the close of this day. And then we kind of retested it the next day and ripped. But it hadn't been really tested again since the explosion off of it that kicked off two new occurrences of all-time highs on SPY. So this was my idea where, okay, well, if we drop down here, that could be an interesting trade, right? To go long. Now, that would be something maybe I would do as a day trade. I wouldn't just take a swing based off just a nice little support confluence as great as that is, right? I need more things. If I'm going to buy time on my contracts and start to think bigger picture, not just looking for a couple dollar bounce or something like that, I need a whole lot more than just a little bit of support confluence, right? So what are some other things I started noticing this day that took it from let's day trade this for a couple dollars to maybe we can get 15 bucks to the upside out of this swing position? All right. Well, the first thing I noticed was a lot of institutional orders coming in on SPY adjacent ETFs. Okay. So things like SPXL, UPRO. Let me actually pull up all these things. I have these in a watch list: SSO, VOO, RSP. Okay. There's a myriad options here. But what I'm finding is a lot of these big directional bets that institutions are making, they're doing on these ETFs where the share prices are way cheaper. All right. They can go grab shares for $68 on UPRO, $76 on SSO, $131 on SPXL, and achieve the same results, right? It's all going to move just like SPY for the most part. And when you start to see these huge orders that are historically big, right? In curious places at curious times, it makes you start to think that something's going on, right? And for this information, I'm getting it from volumeleaders.com. I plan to do a series of videos really, where I detail how I use this platform. It'll take a lot of time. It's a little bit deep. But this is where I'm getting this information. It's more useful than TradyTix for institutional tracking because you can set alerts, you get real-time updates, you get more context around the orders. I mean, it's just way better. So for pretty much all my big dark pool and institutional buy and sell activity tracking, I'm using this now. Back to SPY. I also noticed that, or actually, let's go to TradyTix. I actually noticed an update in the GEX on Tuesday. It never updated Monday. Usually after a weekend it updates, there's new levels. The picture can change drastically. Nothing changed on Monday. But Tuesday, once we gapped down, we got a big change in the GEX, and we have negative GEX magnets, negative gamma, way above price, stacked, 529, 530. This is not something you see all the time, okay? So if you don't remember, negative GEX, like a magnet to price. Positive GEX, the green, repellent. So let's say SPY continues to move up here. At 525, I'm going to be looking for some resistance. But if we can clear it and confirm over it, it's actually going to help push price towards these magnets at 529 and 530, okay? More kind of extracurricular stuff. April. It's a historically strong month for SPY. You can see here on TradyTix that in April, SPY closes green 84% of the time. One of its best win rates of the year. Okay? I believe this data goes back 20 years. On Edgeful, we can see going back 5 years, the max allowed via their data, that April is also a good month, and its average win percentage, or average gain, is about 3%. When we were down here, we were already down like over 1% to start the month. Okay, so it's like just like we buy pullbacks in price, you're kind of buying a pullback in seasonality win chance here, right? If SPY is green in April, closes green 80-some% of the time, and you're able to get in when it's red, it gives you better risk to reward, right? Just like a pullback in a trade. So those were two other things I was considering. Then I'm also thinking about the macro flows. All right, we're in a window of strength that started April 1st and runs into OPEX this month, April 19th. And also it starts to kind of close on expiration April 17th. But that's your Vanna and Charm flows, which have a tendency to act as a buoy, are buoyant to price. Okay, so a little bit easier for price to move and to bounce back from sells in these windows of strength. It doesn't mean we're just going to rip straight up and nothing could possibly go wrong, right? There's a lot more at play than that, but it's just another notch in the column of, yeah, let's take this swing, all right? I mentioned all the institutional orders come in. What do those look like? What are they coming in on? Well, one that really caught my attention was SSO. All right. This is where that order came in. It came in the middle of the day I started my trade. Let's look on smaller time frame here. I don't remember the exact time it came in offhand, guys. I think it was sometime around here. Maybe here. and there was a fight around it initially. Oh, you know what? I'm an idiot. It came in right here. That's why that huge volume is there. Webull actually catches these dark pools, guys, and these institutional block trades, and not many brokers do. But Webull does. So it came in right here. And after a few candles, price got back above it, and it held it well, and we ramped into close. Now, I was already kind of in my swing around here when we started to reclaim. And it could have failed, and I could have been wrong, and these could have actually been sells. But here's what I ask myself when I'm trying to discern whether these types of orders are buys or sells. After price has been all the way up here, and you had a chance to sell here and here, why would you sell again here? I mean, just looking at the chart, right? Why sell right at support? Okay? To me, this is a dip buy. All right? And it's not only a dip buy, it's a dip buy with really nice volume. And it's a large order historically. This was the 8th largest order ever placed on this ETF in history, and the largest order that it's been placed on this ETF since October of last year. What happened in October of last year? Rippy mode commence. Okay? I'm not saying that we're in for another leg like this and we're going to, SPY's going to be up at 700 in a couple months or anything. All right? But it's just a nice thing to know, and another notch on the side of take the swing. We also had some big buys in TNA. TNA is the 3x bullish IWM. Now, IWM's been tough to trade, right? It's all over the place. But a lot of people are starting to think, including myself, that it has potential to start to kind of take over and lead a little bit, maybe into the summer, and break out of this 2-year range that it's been stuck in. But it's, it's tough. It's not quite there yet. But we have lately seen some very big prints coming in. This one's from about 2 weeks ago, okay? And came in around here, has held, right? Little dip below, held. This one came in yesterday, right around the time that the print I just showed you on SSO came in, and with the same idea, right? Same idea and same kind of respect. The order comes in here, kind of sweep under, chop, rip into close, sweep under off the open, hold it, rip off of it, right? Very nice start so far. And hey, we could sell off the next couple of days. I could get stopped out of my swing and just have a small win. I mean, but we don't know. But this is part of what building a case to take a swing looks like for me. And these are all the things I think about. There's also, and we haven't even covered, I mean, this just goes so deep, guys. We haven't even covered rates yet. Rates are a huge thing right now, okay? What happened yesterday? We gapped up over this pesky resistance. It goes back quite a ways. And this would not be good for SPY. It was especially not be good for a breakout continuation, would not be good for SPY, would not be good, especially good for small caps or growth names, okay? But this candle, it was wicky, it had a shooting star kind of look. I was taking kind of an aggressive stance by saying this could be a failed breakout on TNX. And in my experience, some of the best directional moves and reversal moves happen after the failed major breakout or breakdown. Here's a failed breakdown, right? And what happened after that? Nice uptrend on rates for a long time. Since December, the 10-year yield has been in an uptrend, okay? But I didn't like the look of this candle. Well, I guess you could say I like the look of the candle, right? Because I want to see this gap up and breakout not work. I want to see it fail. It could work, and I'd have to cut a stop out of my swing eventually, right? But what do we get today? A push higher. I was a little worried, but SPY, despite the rates being elevated, and ripping off the open. SPY was strong and it ripped off the open, and eventually TNX gave out. And now in day 2, we have another wick up and a bearish engulfing candle closing right at the daily pivot. So tomorrow is going to be important. Can we fill this gap and fade back and maybe confirm, or at least start to confirm, a failed breakout on rates? If so, that's going to be a huge tailwind for equities, especially small caps and growth names. Okay? That's my whole SPY thesis. That's why I'm in the trade. And today was a nice start to it. My contracts got up. I have the April 19th monthlies. Those are the monthlies. I'm swinging them into OPEX. That's when the window of strength expires. All right. And good start today, right? Pushed all the way up. Basically filled this bear gap, but not quite. 2 cents away. Would have loved to just see that fill. Would have loved to see a close and regain of the 9 EMA, but we didn't quite get it. But still, a nice day. Up here, I trimmed. This was the fill of the gap. Big spot to trim, right? I have my alert, 50% on the cons, and I think they're currently sitting up about 22% or something like that. So nice day 1. Here, there is potential that we just reject the 9 EMA and come back down. And at that point, I'll be watching my risk level here of daily closes below this 20 EMA and the big untested dark pool. But we'll see. I'll keep you guys updated. And that's how it's gone so far. Let's talk about a day trade I took today. Moo. One of my favorite ticker names. Anything you can GIF is fine with me. And Moo's great for that. Moo came into the day as an inside day after being a peg, a great peg, with a lot of upside continuation and really nice volume patterns. Here it was an inside day for the first time after pegging, and I regretfully didn't trade it. I thought maybe it's too extended from the 9. So I said I'm not going to worry about it, and I missed on a 5.5% day that made all-time highs. So we got another inside day today on Moo, and I said, you know what? What do I know? Still extended, but screw it. I'm going to play it anyway because it's hot and it's strong, right? And what's overextended can always continue to go higher. What looks cheap and oversold can always continue to go lower. And the way this market's been, a lot of these names that are leading, they just keep leading. A lot of other stuff is flat. So we tried Moo today, and it worked perfectly. Just your standard inside day setup. But the nice thing about Moo today was you had some nice support confluence at the inside day low with this GEX level. And I did have a trend line drawn. If you draw it again, you can kind of see that it also has this really, vertical trend line support at its low a day as well. And if we go down to the smaller time frames, off the open, it wicked down pretty close to our low of our range. And then after that, it was just sayonara. I actually missed grabbing here because I was watching SPY and TNA and all the other stuff I had that was really strong off the open. And so I missed this, but I did end up going and playing the standard way I play inside day breakouts. We got 10-minute close for confirmation. We pulled back and retested. I got in here. We had to eat a little bit of a pullback, but this thing was so strong. So what I like to do when something kind of ripping off the open and it's spanned a lot of this range, I talk about this all the time. I get a little bit worried about what I call the fail and front run is the strategy I tend to use, where in this candle, maybe you wouldn't even get the confirmation. It would close back under and I would look for a pull to the EMAs to get in, but it did confirm. But I just still felt like it's probably going to confirm and at least pull back a little. So I went in to the smaller time frame because of its strength and said, let me watch these EMAs. If we start to really lose the 9, then maybe I just cut. But as you can see, after we confirmed back here, we just bounced off the 9, and it was pretty smooth sailing after that. Taking a trim at this 125 gex to get the trade started out nice. I think it was up about 40% here. Held that really well, getting another leg up. My main target was to make and test all-time highs up at 127.38, which it ended up doing, but I'm scaling along the way. Something like Moo, you can scale every buck, 126, 127, all the way up to all-time highs with very little stress today. It got extended a bit at one point on the 5-minute, and so what I started watching was the first real test of the 9 EMA on the 5. Almost always on a strong stock, you're going to get a nice bounce here, and we did. And we got, and I posted about this in my room, look for the wedge pop off the 9 EMA bounce to be the catalyst to get us to all-time highs. And once we hit all-time highs, I was out 90% of the trade for over 200% on the contracts playing the weeklies, right? I held runners just in case we could maybe make it to 128. There was some positive gex there, and it took a while. We had to chop around for a while. We had to consolidate and absorb this move up, but eventually we made it, right? And now we're even, gapping up more in after hours. Moo is just a beast, and just another peg that you can play for days after they trigger. And I keep them in a watch list, and this has been one of the better ones so far. These inside days just breaking out massively every time the next day. So that's what I did for day trades today. And then let's talk about LYFT. This is a losing trade, and I try to, show my winners and my losers for you guys, because you can't just, no one just wins all the time, and you can't just, you can learn a lot from your losers as your winners, right? So this was a swing I took 2 days ago, Monday, I think. Monday, right here, this candle. The reason I took it, well, it's a peg, first of all, so it's in my peg watch list, and it's been really strong, and you can see here that it's really respected the EMAs pretty well, especially the 20, had not closed a single daily candle below it since pegging, and was coming in and looking like around midday that it was going to probably make a double inside day, right above the 9 and right above this large dark pool print. All right, I was looking to get in here and for that to be immediate support, but to also, it was also an inside week, right? So here's your inside week high, here's your inside week low. The inside week low has confluence with the 20, which it had not closed below ever since pegging. So that was my risk. If we closed below the 20 and the inside week low, I would cut. So day one of my swing, oh great, gap down. And really almost had to cut it day one, but we held the 20 EMA and closed right at inside week low, right at my risk. Contracts were down about 25%, I think, low 20s or 25%. Held it one more day. We're also starting to lose this trend line, okay? Next day, we gap down again, and it is selling hard, all right? Now, I usually try to wait for daily candles to close on my swings before I make up my mind on selling them or not. But I sold off the open on these because when I saw this selling, everything else I was watching was strong. Okay, so I was in that SPY swing. SPY was pushing off the open. I was in TNA. That was pushing off the open. A couple other names I was watching ripping off the open. Moo, right? All these names, they were looking great. And here's LYFT, already down like 3.5% of the day. And my contract's down 40%. I just said, you know what? I'm going to cut it. I know it has the potential to come back later, but I would rather do what, the old saying, pull your weeds, water your flowers. I'd rather just take that 40% loss that I know I can recoup 3 times as over on my next winning trade than stress and have it distract me and maybe make it harder for me to execute to the best of my ability the other trades that are working really well for me. Okay. So I just sold it somewhere around 18, I believe, for a 40% loss. It continued to go down and then it came back and it actually put in a nice wick down, but it ended up closing below my risk levels. So it's a cut either way, and maybe I could have got out for a 32% loss instead of 40, but who cares at that point? The only thing I'll say about LYFT is what does it have going for it? The wick candle here, and the fact that it looks like it could be putting in another higher low. So for people that still have more time on their contracts, or followed me into this trade in the room and are still have it open, I think there's a chance that in the coming days it could remount the inside week low in these EMAs based on this wick down candle. But I'm all out, and that's why. So I took a loss on that trade, and that was my trading day, guys. Hopefully it helps. If you have any questions about anything discussed in this video, just leave a comment or find me on Twitter and ask me a question. DM me, whatever, and I'll help you out. All right.